Hi everyone, it's Gary. Welcome to the weekend update. I thought I'd just start out by looking at euro dollar. We were talking about euro dollar and saying it needed to break 135.05 being the low of last week, and it certainly did that on Friday. So that's good news from the point of view of the shorts. If you see here during the week, this being a daily graph, we put in a couple of doji candles, and that's often an indication that there's a change in the offing, that the change in direction or change in sentiment, because there's the battle between the bulls and the bears simply doesn't get won either way. Over the course of a number of days, in this case, having had this large bullish engulfing candle, we then didn't know what to do with it. So this is up here is the 138.95 that we touched in December, being the lower top, which is now really the new lower top would be by 137.40 being the high of last week. So just to give you an idea on a weekly graph, and just to go back a little bit in history, because this is the descending series of lower highs all the way back to 2008. And if I draw my line, and that's where we touched in December, the week ending December 22nd. So now that we've broken 135.05, we have this lower top now by 137.40, lower again than the 138.95, and our target being 132.95 now on the low side. Followed by another lower high and another lower low and so on, and this trend is projected to continue now as it has been doing since 2008, and the lower end of this range really is in around the 120s that we touched in 2010 and 2013, and I suppose we got close in 2008. So we can see we're forming this triangle, but that's way into the future. 132.95 is the immediate target, I suppose, to the downside, and only above 137.40 give reason for pause, but the dollar strength story does seem to be intact. So speaking of the dollar strength story, we look at dollar yen again, which was also very interesting last week, and if I can get that, here we are. So yeah, also very interesting last week. There's our large push up towards the end of 2012 into 2013, followed by our flag or pennant which took most of 2013 to form, and then projecting from this large up move in 2012 to 2013, we project again upwards to 110 to 112 dollar yen. We liked that idea. We were looking at it back in December, but we were waiting for this pull in because we didn't like this 500 pip upside, but potentially a 500 pip downside as well. So now we're coming down into this triangular resistance turned support, and also if you see on a daily chart, we're at the 200 period moving average as well, which held in October twice and in November, and here we are again now. So that's dollar yen, and let me have a look at we look at Aussie New Zealand dollar as well. Actually, do you know what, I'll start looking at dollar CAD first, because that had a big move too. And here's the daily chart. This is Friday's price action, up past it kissed 112 and up through it really, into 112 23 to 25, just after GDP numbers at 1:30 GMT on Friday, and then we push lower. And it would have been much more useful from the point of view of the bears, for example, if we had finished on a shooting star candle, with the body of the candle being here with almost no shadow or no shadow at all. It had certainly set ourselves up for maybe a more of a move to the downside, or at least give us more conviction. It is still technically overbought, 71, even after Friday's price action, 71 RSI. There is likely to be more of a pullback in the course of the coming days. I probably won't try and short that. I'll let you know on Twitter if I am, but it really is against the trend. The trend is for dollar strength and for Canadian weakness, and for commodity currencies of all types weakness. We talked about the New Zealand dollar during the week, for example, and the Aussie dollar, which is weakening significantly and has done. But you know, I did play this on Friday, but not through this instrument. In fact, I went long CAD CHF, long CAD Swiss, and as you can see, we had this nice little move on Friday, which I took profits on and booked them. So you know, it is seriously against the trend. The trend is for Canadian dollar weakness, but I like the idea of exploiting the Swiss franc strength because of the risky period that we're in, and how the Swiss franc has strengthened already, and perhaps was overdue a little bit of weakness, plus the Canadian dollar being so grossly sold over the last couple of weeks, really, and was you know, on daily studies very overbought. For example, dollar Swiss franc, dollar CAD, that, you know, I thought the loonie was due for a little bit of strength, and that was a way to play this, both the Swiss franc story and the Canadian dollar story. Plus, of course, we were just coming off RSI 30 on this market itself, on CAD CHF. So that is Canadian, and that's what's been happening there, and we'll have more of that next week. I'm sure there'll be a lot more opportunities to make some money on the Canadian dollar next week, or the commodity currencies, specifically New Zealand dollar. I think there might be some good opportunities next week. The other thing I suppose I wanted to show you as well, which I'm still long and it's making money, is the Aussie dollar, New Zealand dollar. It's up at 108.17 there now. I'm looking for, if we take this time frame to a weekly, I'm looking for a move above 108.60, which would be a nice move, and it'd take out this candle, the candle ending January 12th. For another push higher. I like this story because the Aussie dollar has weakened so much now over the past couple of months, and the New Zealand dollar, which is also a commodity currency, has not, and that I think is well overdue now. Some weaker price action, and as you can see from a technical point of view, we've been down in the 104 to 106 since 1996, 2003, 2005, 2006, 2009, and every time it goes down here, or at least up to now, it has rallied 300, 400, 500 points, sometimes 1,000 pips, sometimes, as you can see here and here, 3,000 pips, so and more. So, you know, I think it's a compelling setup. That's why I'm long. I think there's much more money to be made in this, and you know, you'd be looking at I think any reasonable person would be looking for 112 to 113, perhaps more. That's almost the minimum of what we've done on any of these other occasions where we've been down here. So look, that's the weekend update. I'm not going to go into the depth that I would during the week, but I do hope you have all had a good January, and a profitable one, and let's see if we can do even better in February. That is it. Take care and be careful.